Hey friends, welcome back to the channel. My name is Sanjay, and in this video we're going to go through what happened to one of Vanguard's ETFs. It lost $60 million of funds under management, equal to 30% of the FUM. Phenomenal. In this video I'm going to go through which ETF this was, how I noticed it, and what it really means to you as an everyday Australian when you invest in ETFs, what this whole funds management thing is, and why it does pay to pay attention to what that number is doing every once in a while. So let's get into it. So the first question is, which ETF are we talking about here? Well, it's VEQ, Vanguard's European focused ETF. In terms of funds under management, it is relatively small. I mean, it got a little bit smaller, but it's around a $200 million funds under management ETF. And when you line out Vanguard's ETFs from biggest to smallest, like you can see in this graph, VEQ is like the 20th biggest ETF. It's quite small. You got VAS and VGS, the heavy hitters at the top, VTS, you got VGB in there, government bonds, so boring, but it's getting a shout out there halfway through. And then VAE, Asian focused without Japan, is also in there. And then towards the end, you got VEQ sitting at around $200 million of funds under management. So in terms of, magnitude, I don't know if this would have registered on Vanguard's radar, but I'm sure someone there would have noticed, hey, we just lost 30% of funds under management in one of our ETFs. We should probably find out what happened there. Now, this is important to you because funds under management can have an indirect impact on, I guess, whether or not that ETF will still be around in a while. So what is funds under management? Well, funds under management is essentially all the money that is being held by this ETF on behalf of the shareholders, you and me. So if you added up all the money I had in this particular ETF, all the money you had, and all the money all the Australians had in this particular ETF, it would equal the funds under management. So it'd be around, for this particular ETF, it was around a little bit over $200 million, and now it's around the $170 million mark. And that's what we're going to look into, is that drop. What happened? Because that means a certain person, and I believe it was one collective, suddenly extracted a whole bunch of money out of that ETF. Now, why this is important, I'll explain a little bit later, but essentially, if the FUM gets so low, it can get to the point where the ETF issuer might have to actually shut down that particular ETF and return the money to the people. So it is an important number to keep an eye on. Now, this particular ETF, VEQ, lost the $60 million, and I can tell you how I found out about it. Basically, once a month, the actual Australian Stock Exchange releases a monthly report on ETF performance, and I guess it's like an ETF status report. And in it, they show you what all the different ETFs are doing, and things like the expense ratio, the funds under management, and the funds under management flows. How's it going? Is there a lot of money going on net going in, or is a lot of money net going out? And that's what this particular PDF does. And I looked in this PDF for VEQ, and I noticed it had this $60 million outflow coming out of it. And I thought, hang on a second, what does this mean in terms of the whole scale of it? Because it's a $200 million FUM, so $60 million is going to be quite meaningful. So when I actually went through all the previous reports and I tried to track what's the FUM inflows and outflows for VEQ over the last few time periods, and I got this particular graph here, where you can see it's usually around 10, maybe $20 million. And then in February, you got this massive extraction of $66 million that just suddenly disappeared out of the fund. Not disappeared, obviously someone's taking it out. So this got me thinking, and this got me worried, and I thought, but it's a European focus. Surely this is not going to be a catastrophic failure of the ETF. Surely this is just a moment where maybe someone just didn't want to focus on Europe. Or maybe I don't understand how any of this stuff works and I'm just making this up. I don't think that's the case. But anyway, I would leave the conversation there. But then my eyes wandered. They wandered through this PDF and they landed on IEU, which is interestingly BlackRock's ETF that also focuses on Europe. And look at what I saw there. I actually saw that they had a fund inflow of $70 million. Let me show you what this actually means. When you plot this out on a graph over a certain time period, this is what it looks like. VEQ and IEU between October and February of this year, kind of steady fluctuations, 1 million here, 1 million there, 1 million coming in, 1 million going out. And then suddenly in February, bam, 66 million out of VEQ and 73 million into IEU. Something's interesting is going on here. Now, this is a prime point for me to make a controversial point, and I don't want to make this point, but let me tell you what I don't want to tell you. It's basically this idea that it looks, when you look at this, I mean, you wouldn't be blamed for thinking, gee, it looks like someone just took $60 million out of the Vanguard European Fund and put it into the BlackRock or iShares European Fund, ETF. But I don't want to make that statement because of the following. Because in my mind, I was thinking, I wonder if you have to wait till the end of the month to see these reports come through from the ASX, to see these funds inflow and outflows. Like, is there some way of knowing during the month if there's been this major transaction? And I thought, oh, let's look at the volumes on these trades. So interestingly, you can actually see it. So this is a screenshot out of Yahoo Finance, but you can see the same thing on CommSec, NabTrade, any of these where they show you price and volume transactions. You can see there on the 23rd of February, there was this massive spike of volume that was traded on VEQ. You can see, look, normally it's very low. You can barely see it. But on the 23rd of February, massive spike. Then when you look at IEU, you see on the 5th of February, there was a massive spike in their volume. And that's probably where the inflows came from. Now, this is where I'm going to be careful and not make that controversial statement about money going in and money coming out, because it looks like the money went into IEU in early February, and then the money potentially came out of VEQ in late February. So I can't really make the statement that I think the money came out of one and went into the other, because it looks like the money went into one and then came out of the other. So it's probably not the same person, but the magnitudes were incredibly similar. I mean, why couldn't you say that conclusion? But I won't, so I didn't say that. I'm just saying it's very interesting coincidence. So what does this all mean for me? What does it all mean for you? Why should you pay attention to it? Now, I admit, I don't always track this. I do kind of check in on FUM every once in a while. The reason is, number one, if you see, or if you're in an ETF that's been having a lot of negative FUM, like money's flowing out of this ETF, you do have to wonder, should I still be holding it? Now, I know you shouldn't be making decisions based on what other people are doing. You shouldn't be worried about what the market is doing, and you keep trading, you keep focused, you do your weighted average reducing, DCA, all that stuff. You should do that. But at the same time, it's like sitting in a movie theater watching a movie and then just everyone else is slowly leaving. You'd be a little bit curious, right? And that's the thing. If you see a consistent negative trend, and this is not a consistent negative trend, can I just say, this was a one-off transaction. But if you're looking at an ETF that you either own or are thinking of owning, and you look at the funds under management, what the trend has been over the last few time periods, monthly time periods, you would not be blamed for being a little bit worried if there was one that had consistent negative outflows, and you're thinking, why are people getting out of this ETF? Like, what do I not know? Or what do they know that I don't know? Or what are they insecure about? Or what are they worried about that I should be worried about, or I should be considering? So that's number one, is, funds inflow and outflows give you an idea of the popularity of that ETF and if you should be taking it seriously. Secondly, and this is slightly more controversial, and I don't think this applies to VEQ, but I'm going to call it anyway, is if an ETF has consistent outflows, at some point the ETF issuer might have to shut down that ETF. Let me explain. The way ETF companies make money is by charging you and me a fee. You see that MER, or the 0.35, 0.2%. It's 0.2% of your holding. So 0.2% of your holding is essentially the 0.2% of the funds under management. If you did that, you could calculate their estimated revenue, I believe. So if the funds under management is progressively getting down, they are charging fees on less and less people, and yet they would have fixed cost on running this ETF. So I imagine at some point, it's going to cost them more money to run the ETF than they're getting from fees from you and me of people who are holding that particular ETF. So that's why consistent outflow of an ETF, and if it starts to get really small, like 10, 20 million, and I'll probably do a video on it in the future around funds that have had to shut down and how you might be able to predict which one's about to shut down in case you're holding on to it, it's something to be concerned about. Now, it's not the end of the world when an ETF does shut down. What essentially happens is they shut down the ETF and they give you your money back, but they give it to you back immediately. So it can trigger a bit of a tax event. So if you were running at, say, a profit and they had to shut down the ETF, then you might have a capital gains tax event suddenly occur on you. And that can be an inconvenience. So it's not like they run away with the money. They just say, look, it's not feasible for us to keep running it. We're going to shut it down. It hasn't happened to me, but it could happen. So that's why I'm just keeping an eye on it. So what does this now all mean for me in terms of my strategy? Well, when it comes to now reviewing my European exposure, I'm now going to be generally thinking twice before I think of buying more of VEQ. I'm going to be thinking, should I just buy IEU instead? Or should I find some other ETF that hasn't had a significant outflow of funds to use to get my position up or increase my exposure to Europe? So that's the kind of thinking that's going through my head now after I've seen this major outflow. So anyway, that's what I wanted to share with you in this video about funds under management, about knowing where to look to find out this number, especially the inflows and the outflows, and what it might mean for you, especially if you're seeing something with a lot of negative, a lot of outflows going on. So if you enjoyed the video, like, comment, subscribe. Let me know if there's a particular ETF that you've seen that you're a little bit worried about in terms of funds under management. If you want to see my other videos on ETFs, click up here. And if you're interested, feel free to check out the description below for a newsletter that I've started that you can sign up to. And I'm calling it the weekly-ish newsletter because I kind of put it out reasonably weekly-ish. And also if you're interested in having a bit of a chat with me, a free coaching call, let me know below. You can set up some time over Zoom. So with that being said, I'll see you in the next video. Bye for now.